run an important European institution that is now playing an increasingly counter-cyclical role in this crisis, in the sense that you are helping to address the financial fragmentation a different way by increasing funds, particularly to try and counter the lack of access to financing by small and medium enterprises in crisis countries. Can you explain, because I suspect for many in the audience here, what you do or your institution does is perhaps less well known than what the other three do. So give us a sense first of the EIB's role in this. What are you actually trying to do? And from your perspective, is this progress to the banking union that we've had described proceeding successfully? And are there things that you, because you have a much more on-the-ground view, think need to be done to accelerate it?
Well, thank you very much. Of course, the EIB indeed is probably one of the least known EU institutions and one of the least known multilateral financiers, but we are the biggest one. So that's quite an unusual statement. The fact is that only during the crisis, after Lehman Brothers, the bank really came out of the shadow of the Luxembourg woods. It had grown considerably over more than 50 years there. And now that the crisis was there, the political leaders detected this as a very powerful instrument with a balance sheet of more than €500 billion. It's quite something to have in your hand in order to combat the crisis. Now, of course, we have to go to the causes of the crisis. You mentioned fragmentation of the markets, which brings us into a completely new dimension, not completely new, but a new priority setting for the bank. When the bank was founded in the Treaty of Rome, nobody would have thought about short-term financing or relatively short-term financing for small companies and small tickets. At that time, the bank was founded for long-term tickets with long maturities and big volumes. So this has completely changed now because the need is there. In this very crisis, the bank has indeed turned from pro-cyclical to counter-cyclical with the help of the member states who granted us a considerable increase of the paid-in capital, which enables us to increase the volume very, very much by this year by 40% in 2013 and also over the next 2 years. So we can play a significant role in boosting the situation on the real markets. However, sometimes this instrument is a little bit overestimated because what it boils down to right now, and you asked me about the banking union progress, it boils down to the question of confidence and trust. So although I have the easiest job among the 5 institutions that we normally represent when Gerud can be here, who has difficult situation in Parliament today and in The Hague, I'm responsible for growth, innovation, and deployment, so that's always positive. The others have to do the necessary reforms in the European Union or to make sure that the banking system is working properly and things like that. Supervision, all these non-popular things need to be done as well. So we see this as one complex of measures, of set of instruments that need to be played together along one script, and that's what we're doing. This is why I believe that if the colleagues succeed in establishing more confidence in the banking system and in the economic development, then the role of the EIB can become less relevant, and that will be good for Europe.
It would be good for your role to be less relevant. So
yes, it is. I mean, then we are successful if the need to fill gaps which the commercial banks and other banks cannot fill is reduced. I don't foresee that coming because in view of a potential upswing of the European economy, the demand for loans is going to be considerably increasing and not decreasing. And in view of the regulatory changes in the banking system, I think the credit crunch will not disappear. So there will be room for an institution which is at the same time an EU institution based on the EU treaty and at the same time a very market-oriented institute which must fund on the international markets for almost $100 billion per year.